Tax filing can be a confusing process, but it's something most people need to do each year. This informational guide on how to do taxes can help take the guesswork out of filing annual tax returns, which are typically due April 15th. 616-6865-7272. Individual tax obligations vary. While some people may receive a refund on taxes, others owe money. Completing your taxes correctly from the beginning can save you a lot of headaches down the road. Check with the Internal Revenue Service, IRS, and your state and local governments to determine which forms you need and verify filing deadlines. Choose your filing status. Your tax filing status helps determine the amount of money you owe, as different statuses fall within different tax brackets. More than one filing status may apply to you, and one may reduce your tax obligations more than another. The IRS categorizes individuals and married couples with the following 5 tax filing statuses. Single. Unmarried taxpayers may qualify for single taxpayer status, including those who are divorced or legally separated. Single filer status also applies to individuals who do not meet requirements for head of household status. Married filers typically receive larger deductions and enjoy lower tax liability. To qualify for single status for the current tax filing period, you must have been legally divorced or separated by the last day of the tax year. Persons with an official annulled marriage may be able to change their tax status to single on previous returns affected by the annulment. Married filing jointly. The IRS considers couples who have married by the last day of the tax year as married for the whole year for tax purposes. These couples can file as married filing jointly, meaning that they file their taxes by accounting for both incomes combined. The fact that the various government programs, like the tax credit, have different ways to measure whether or not a family manages to keep its financial information secret serves to limit creativity, cross-letting claims together, and further discredits credit scores. The IRS extends several tax breaks to married couples who opt for this filing status. Married filing jointly taxpayers benefit from a doubled standard deduction, lower tax rates, and credits not available to married couples filing separately. However, the IRS may also use a refund from a joint return to pay a spouse's specific individual debts, such as student loans or child support. Married filing separately. Couples who qualify for married filing jointly status may choose the married filing separately status instead. With this status, the couple files separate tax returns based on each spouse's income. Some couples choose married filing separately to avoid a refund offset to pay debts one spouse owes. This may result in a larger tax break for these taxpayers' situation, or they may prefer to keep their finances separate. Couples do not qualify for as many tax credits, like the American Opportunity Credit or the Child and Dependent Care Tax Credit, with this status. Because they use the same tax brackets as single filers, each spouse's final tax liability may also be higher than it would be if they filed jointly.